The next thing is reputation. 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 This means how an organization fulfills other principles of governance. It is often a very valuable asset of the organization, because if an organization is fair, it's very open, honest, responsible, and what was the last point? Accountable, then automatically the organization is going to have a reputation. Now remember, I spoke to you about reputation in other videos, and we spoke about the value of reputation, that the way people sees you as a company affects how they relate to you. So the reputation of the company is very critical, and so every action we take, every behavior we undertake as a company contributes to our reputation, which when tarnished will really take a couple of time. Sometimes it may never go because of the media now. Even if you go, somebody will come and publish and talk about it, and that may affect us as a company. The next thing is judgment. 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 This means that the board making decision. This means that the board making decisions that making decisions that enhance the prosperity of the organization. This is ensured by directors having multiple conceptual skills to manage. Let me take that again. This is ensured by directors having multiple conceptual skills to manage that aim to maximize long-term return. To manage that aims to maximize long-term return. So that is what judgment is about. You see how the organization uses judgment. Now this is going to be based on the skills that management have. That is why board of directors must have not just a single skill. They must have multiple skills. They must have skill in finances, understanding financial statement, understanding system, understanding controls, understanding a lot of things. It has to be a balanced skill so that every decision they are making, it's going to be the right decision, because the board or the management cannot make a decision based on a certain assumption or a certain judgment, and later on the decision affects the reputation of the company, or the decision leads to the company paying fines or penalties. It will affect the company. Then the next thing is integrity. Integrity. That is the hallmark. Our hallmark, ICA. That's our hallmark. Integrity. This means management being straightforward in dealings and completeness. It means adhering to principles of professionalism and honesty. The Cadbury report stressed on the need for personal honesty and integrity of preparers of accounts. This is one of the International Federation Codes of Ethics. We'll be looking at the International Federation of Code of Ethics in a moment as we continue, because in the year 2006, Institute of Chartered Accountants Ghana adopted the International Federation of Accountants Code of Ethics, and it became the Code of Ethics for the accountants. So all accountants are supposed to behave in such a way that they abide by those principles, and one of those principles is integrity. Being straightforward in all your dealing, not concealing the information, not trying to be dishonest. You got to be honest in everything you do as an individual, and most importantly as a company in relation to that. So these are some of the concepts that we need to understand when we talk about concepts of corporate governance. Now, the next thing we need to ask ourselves is, how are organizations, okay, or how will an organization actually become ethical? In other words, organizations are not autonomous. Rather, they exist to serve a certain purpose. Now, if organizations are not autonomous and they exist to serve a purpose, then it means that there is a way that they must behave in order for that purpose to be served. So what we want to look at is to discuss the issues about ethics and laws. Ethics and laws. And the first thing we want to talk about is fiduciary responsibility. Now, fiduciary responsibility means a manager have a duty of faithful service in respect of stakeholders, and their behavior must always reflect it. So, what is the fiduciary responsibility of management towards shareholders? What is the fiduciary responsibility of management towards customers? What is the fiduciary responsibility of management towards the employees, towards the government? All of these things must be known by the organization so that the organization acts in a way that reflects it, so that the organization will be perceived to be ethically right and also to abide by the laws of the land. Because if, for example, we have to provide a good working environment for our employees, it is the standard, and Ghana Standard Authority, or we must have a fire gadget there from the Ghana Fire Service. We must insure our building from the Ghana Insurance Company, or we must insure our companies. Then, and we don't do that, that means that we are not adhering to lay down rules, lay down policies. If you are a financial institution, we must keep a certain minimum capital. We must keep a certain minimum balance. Our borrowing ratio should be at a certain rate, and we are not adhering to that, meaning we are disobeying, and that could lead to fine, and eventually that could lead to the collapse of the business. But then we have to look at the boundaries of management discretion. In management exercising their duty to various shareholders, there are a couple of, they have a boundary, okay? Because each stakeholder has an objective, and management must ensure to balance off all these through their actions and discretions. Remember, we spoke about stakeholders, that employees, they have expectation, shareholders have expectation, customers have expectation. So the organization must decide every time, and there is always going to be a conflict of interest all the time, but the organization must decide very well to make decisions that fairly treats each of the stakeholders well. Then let's consider the issue. So I have an example here. I think, let me read that to you quickly. Managers need not to be actually corrupt in order to fail in their fiduciary duty. The CEO who sets in motion a takeover bid that will enhance his prestige. The head of a department who empire builds, and the IT manager who buys an unnecessary sophisticated enterprise resource management system are all failing in their fiduciary duty, even though they receive no material benefit themselves. So when we talk about fiduciary duty, it's not only about the company doing something, or employees doing something that benefits them. Sometimes it doesn't benefit them. If the IT manager is not trained enough, or doesn't exercise a good discretion, and buys a certain software that we cannot use, that our level as an organization cannot use, then he has failed in his fiduciary responsibility as an individual. Now let's look at the global ethical environment. So we want to go a bit international. The global ethical environment. So how does the global ethical environment looks like? You see, one thing you need to understand is that ethics and morality are about right and wrong behavior, period. Something that is morally right, or something that is considered ethical, is simply about right and wrong. Now, Western thought about ethics is based on two ideas. So when it comes to the Western, Europe, when we go to those kind of environments, things that are considered ethical are based on two ideas, what we call duty and consequences. Duties and consequences. Now, what does it mean? One thing you need to understand also is that ethics is also influenced by the virtues and rights of people. So what people value, what people's value, people's belief, all right, people's rights will influence them as to what should be ethical and what should be unethical. That is why in some places gay is allowed. In some places, gay is not allowed. In some places, when you are going to visit, like Japan, and we'll be looking at that later on, you have to take gifts to the person. But in other, and it is acceptable because that is their culture, so that is ethically right there. But if you go to other culture, when you go to and visit somebody like that and you provide a person with that gift, people would think it is a bribe that you are giving to the person. So what is ethically right in one environment may not be the same in another environment because of their values and because of what they think is right and what they think is wrong. So in that case, since organizations want to go global, organizations always have complexity in dealing with the political and social environment. So whilst the political environment consists of the laws, the regulations, and government policies or government agencies, the social environment consists of customs, attitudes, belief, and level of education of citizens, because all of these affect how an organization is able to do what is right or what is wrong. So we are going to build on the Western idea of ethics and talk about the idea in relation to how ethics is based on duty and how ethics is based on consequences. So ethics based on consequences, we're going to be discussing that, and then ethics based on duty, we're going to be also discussing that. So I'll see you in the next video as we continue with our discussion on these two ideas, ethics based on consequences and ethics based on duty.